Oath is more than just an insurance agent. They're your promise keepers, whether it's auto, home, business. This one is for you. Good morning, everybody. Welcome into the Elite Real Estate Podcast, and another fine Friday morning. And I'm joined in studio today by my man Dave Keblaitis. See, I did it.
Yeah,
we
good
checked
job.
We checked it before. It's that good Greek name, right?
Everyone says it's Greek until they see my pale face, and then they know I'm not Greek. It's Lithuanian, actually.
Really?
Yeah.
See, I guessed that wrong.
Like the tennis player, Vitas Keblaitis.
Got it.
That'll date me, but yes.
Yeah. Yeah, everybody out there listening is like, who?
Yeah.
I know.
What did you say? Babe Ruth?
Yeah. Yeah. We can talk about Rusty Staub. We can go into a whole bunch of different ones.
Good.
Yeah. But no, man, welcome into the show. I appreciate you dropping in this morning. And it's always nice to get somebody in studio. Like a lot of people will stream in.
Yeah.
But it's always nice to have somebody like face to face and in the studio because it's like
the energy's better, right? I'm looking at you.
Yeah, the energy's better. Like even when we stream in, like we're looking at each other, but it's still, we've gotten used to this since COVID, right? We're post-COVID, but it's still not the same. So
yeah.
I appreciate you jumping in this morning and getting out here. So how
happy
long of a drive was it for you?
45 minutes.
Not too bad.
Yeah, I live in Metamoris, so off a dirt road. So to get to the gas station or to Meyer, it's 15 minutes. So everything's a drive.
Yeah, which is good.
Yeah, it is. You can't find me.
Dave's living off the grid
a little bit.
Yeah, which is not good. Well, again, post-COVID, right? It doesn't. As long as you got Wi-Fi.
Yeah,
you're good.
Location is subjective.
Yeah, for sure. So you do mortgages. How long have you been in the mortgage game?
I've been in the mortgage game 26 years. It seems crazy to say that.
Yeah,
been a minute.
Yeah, and we were talking. It's funny. I find this a lot in our industry, but whether it's real estate or mortgages or whatever, because I started in the business on the mortgage side. So I worked at Quicken and then transitioned into real estate. But the funny thing is I find this in our industry, and again, whether it's mortgage or real estate, is we don't start out going, man, one day I want to grow up and be a loan officer.
No, you definitely don't. And I fell ass backwards into this business like a lot of people did.
Yeah.
It's an interesting path.
Yeah, because you went to Michigan State?
Went to Michigan State, got a master's in mechanical engineering, and I was that kid who could not see 5 feet in front of his face. My dad was an engineer at Ford. I was good at math and science. So I just kept going. Got my degree and said, what did I do? I don't want to work for Ford or GM. So I took a consulting job at Accenture for 6 years, traveled the country, and then, again, just fell backwards into this business, and been a blessing.
Yeah. And then somebody said one day, he said, go take this SAFE exam.
Right. Right.
And then here we are 26 years later in the mortgage game.
I blinked, and here we are.
It's crazy. It goes so fast. And so what company are you with?
Cornerstone First Mortgage.
Okay.
So we're national, growing. We probably are the fastest growing company in the country, and they're based in San Diego. And I planted the flag in Michigan, so now there's 2 branches in Michigan. Okay. I got a buddy who's got one out in Brighton, and then I've got my branch.
Okay. And then you just run everything out of the house?
For the most part. Yeah. I've got an office. We have an office in Brighton. I had one in Rochester, but no one would ever come see me. It was pretty lonely. So I created a nice home office, and I work primarily out of that.
Nice. That is one of the bonus things. And we could look at it different ways, right? Business owners look at it a little bit differently, but that was one of the things COVID really advanced quickly for all of us.
Yeah.
Was this ability to work from home.
Absolutely.
Or the beach or wherever.
All right. Yeah. People just want to communicate, whatever means that is. You don't have to be face to face. They don't want to come into your office anymore, especially, you got the different generations, right? You get the younger people Well, I'd love to get on a Zoom or meet them in person. They don't want to.
Yeah.
And then you got the really old generation who you have to take a phone app. You can't send them the link, which happy to do. And then you got the middle area where like us.
Yeah. Yeah. Somewhere in the middle. Yeah. No, well, we were just on a phone call yesterday and I had an agent ask me, she had an elderly patient. She's or patient.
We're doctors
yeah,
now.
Yeah, may as well be.
Sometimes we are. Of
Psychologist,
psychology.
yeah, psychology for sure. But she had a client too that was an elderly client, and she literally had to print everything out and go to his house and get him to sign everything.
I've done that. It's you do what you do. You know,
Yeah.
you want happy clients at the end of the day, and that's
Or patients.
I'm gonna start calling them patients and see how they react.
There are a few that I could put. You know what? Maybe that'll be my CRM. I'll go into my CRM today and I'll put patients in some of those. Like, categorize some of those clients as patients, not clients any longer.
Don't tell them.
Yeah. It's just so that it puts my head in the right spot when I'm reaching out to them that they're patients.
Right. You're prepared mentally
Yeah.
for the conversation is about to ensue.
Right. Oh man, it's so true though. Like what we do, people sometimes just don't understand, what we go through. As mortgage guys and real estate guys and what we deal with.
Yeah. You have to be a good listener. I mean, because at the end of the day, it's not like pushing a program on someone or pushing a house on someone. It's like truly listening, be a good listener, and
Yeah.
see what their needs are, and not become not just there you go.
See,
I was asking if you had a laugh track, and now it's proven.
Yeah.
I didn't believe him.
That's your little applause meter. We'll give you some applause for saying that. But you're right. You have to be a good listener.
Mhm.
Like that's the biggest thing. Like I teach a lot. I coach a lot of agents across the country, and that's one of the things I talk about is asking more questions,
Right.
and then listening.
Absolutely. It's not about you, it's about them. And just like when you're networking, I get a kick out of sitting down in a network meeting and getting to know someone. And I've sat down where I know this is a person I want to work with because they asked me about me and I'm asking about them. But I've sat down with people where they don't even know my name at the end of the meeting. They didn't stop talking about themselves. Like, you got to listen. It's a skill.
Yeah, it is. It is. And who do people like talking about more than anything?
Selves.
Yeah.
If you can find if people discovered that I had a kid in travel baseball and that was my hot button, they're my friend for life. If you can discover that about anybody, that's why you need to listen, find out what what makes them perk up, what makes them smile as soon as you mention it.
Yeah.
And then you've got a friend for life.
Yeah. And the other piece of that is the fine art of that is figuring that out over the phone too.
Mm-hmm.
Because you can hear it.
You can. Oh yeah. You can. Just like when you're making a sales call, people, if you're smiling and happy when you make that call, people can sense that energy on the other end. If you're scared or downtrodden or bored, they can sense that too. And it's just an energy level you can actually sense over the phone.
Yeah. Yeah, it's true. It's true. I did a video like a year ago. I probably have to redo that one. But I did a video of like a realtor on different scenarios on the phone. Like I put my hood up and put my feet up on the desk and was like, yeah, do you want to sell your house? Well, you can literally hear that through the phone.
You can.
No, I exaggerated it a little bit, but
no, right. For effect. And it came through.
Yeah.
It worked.
Yeah. Because you see this from time to time, and again, working from home, people don't get out of their pajamas. They're going to make some phone calls, but you can hear that through the phone.
You can. You can feel it. That's so true.
Yeah.
And environment's everything. You got to put, I work from home for the most part. So I got to make sure that my environment at home is conducive to high energy, being a good salesperson, being a good mortgage person. Because if I put my office right next to the refrigerator in my bedroom, that's probably not a good thing.
Right. So tell me about your home office then. So what is that when you thought about that, like for a design feature, like what were you thinking about?
So I put it down in one corner of the house and, good lighting. It's got windows to the property, which is beautiful property outside, which is high energy for me. It's my happy spot. It's, and it's a very professional office. Got bookshelves. I feel like I'm in like my dream office, right? It's a good feeling when I walk in there. I feel confident and happy, and it's set in part of the house where it's set away. It's like I'm not even in my own house.
Yeah, I love that because it is hard. I was just having a conversation with an agent the other day, and I said the funny thing about working from home is I feel like I eat too much when I'm at home. Now, if I'm at the office, I'll go all day and not touch food, like, as I'm, I'm
Right.
bouncing from here to there. Enough caffeine to get me give me a couple of these a day. I'm good.
Yeah.
So, but at home, I'm like, oh, what's in the fridge? Like, so again, putting it away from that stuff, because then if I don't want to be away, then I feel like I have to stay where I'm at.
And technology helps with that. Like we've got our company, the other branch managers have a Teams chain, and it's just a very collaborative company. So we're always bouncing ideas and sharing during the day on Teams, and that kind of gets your energy up a little bit.
Yeah.
And I try to book. My goal is to book 4 meetings a day.
Okay.
So Zoom meetings. And that's with a new realtor, a new financial partner, a new client. I do a client buyer consult or a past client. So if I'm booking 4 1-hour meetings a day, that's, that that keeps me in that mode, and I'm not,
Yeah.
it's a good thing.
So 4 1-hour meetings a day, and are you just cold calling, or is that networking? Like, where are those coming from?
So the cold calling, well, if it's so we've got a system where I've got a setup person, and we use Salesforce as our CRM. So apps in, she's go back to the patient thing, right? So
Yeah.
she's the nurse, and she's prepping the docs, and as soon as the file's ready, she puts it in the folder and says ready for the doctor. So that's when I would book call with you if you're the client and say, okay, you're pre-approved. Now let's take a deep dive, and this is where the rubber meets the road.
Got it.
And we're going to go over. I share my screen. It's a Zoom, and especially for first-time home buyers, this is so invaluable because they see I'm extremely transparent. I show them every option. We can look at changing the price point, how that affects their payment. They see all the closing costs. They understand, this is, they're very prepared with their numbers. They know it's just not 3% down. It's okay. Here's my escrow. Here's, what I have to do in addition to that. So that's what a buyer consult looks like. And then they go back to the realtor. They're sticky to me, to the numbers, and the realtor gets an extremely confident, a client who knows their numbers, and they know that their budget matches this price point. They're going to make strong offers.
Yeah.
So that buyer consult, those meetings, those 1-hour meetings are money.
Yeah. I love that so much because again, it goes back to the patient, right?
Yeah.
But it's true because a lot of times, without naming companies locally, it's like, here's your pre-approval.
Right. It's transactional.
Yeah.
And I've been doing this for 26 years. I would be bored to death if I was just a transactional guy.
Yeah.
And I don't feel like I'd be serving anyone. So that's why I set up my team so I could still do the volume that I want, but go down and do a deep dive with everyone and make it a real relationship.
Yeah.
That's important to me. Otherwise, I'd be bored to death. If I'm not getting to know a client and really, truly feel like I'm helping them, then I'd probably be retired right now.
Yeah. Yeah. Because and I have this conversation with clients from time to time too, where it's like, all right, well, you got pre-approved for, let's say, 400,000, but does that fit your budget?
Bingo.
Like, does that fit your budget?
It. And then the realtor will say, "Well, give me the max." I'll say, "I'll give you the max, but I'm telling you, this is where they're comfortable." And if I'm working with a professional realtor, which they get that, and they're going to stay within that range. Well, what often happens, right?
Yeah, I do.
So I'll say, Jimmy, they're pre-approved for 400. Their budget, they feel really comfortable with the payment around 300, and then we're not going to push. We set them off, and now they're going to see a house for 300, and they say, "I don't really like this house.
Yep.
Maybe I could push it to 350."
Yeah.
So that always ensues after the initial consultation.
Usually, always.
Oh, almost always.
Yeah, almost always. Likely 100% of the time. But no, it's true because people will see this, and then they get so stuck on this number, right? Whether it's 300 or 400 or whatever their thing is, they get so stuck on this. And I think this is where agents recently, probably over the last 2 years, year and a half, our market's been a little weird, right? It slowed down a little bit. What rates? I don't think it had anything to do with rates. I think it had to do with pricing.
It's not rates. It's property taxes are creeping in to be a big factor too.
I want to get to that because it's awful.
To me, it's not. I coach my clients, and never about the rate. It's about affordability.
Yes.
Okay, let's ignore the rate. It sounds like I'm being self-serving when I say that, but I'm not. Ignore the rate. Let's look at your payment. Can you afford this payment? Do you love the house? Get a foothold in the market. The rates drop, wonderful. You'll be able to refinance at a lower level and you live happily ever after. But if you're gonna be one of those people who's gonna wait till the lowest rate possible comes out, and then everybody and their brother jumps off the bench and bids that house to the moon, you really didn't get anything.
Yeah.
And you might not get a house.
Yeah. Yeah. No, you're spot on with that because it becomes so, they get so stuck on the rate that they lose sight of all the other stuff. And it's like, well, the rate's going to do what the rate's going to do. That's
Right.
It's never, we can't control that.
Right.
Like if we could, I would love it. But the property taxes, and I'll give you a scenario. So last summer I sold a house in Roseville. I live in Roseville. It was my neighbor's house. It was the original owner. He built the house 50 years ago.
Oh, okay. See where this is going.
So it's a double lot. We have acre lots. So I have an acre lot too. So he had two. This thing, $11,000 is what they were moving to.
Oh my god,
a year.
And what were they before they moved?
Like 5.
Right, more than double.
Yeah, more than double. And actually, they were like 4 something. They almost tripled.
Yeah, so that's a real problem with affordability, and a lot of professionals won't have that conversation. Right?
Yeah,
and then you get people who are just absolutely shocked and unhappy a year down the road.
Because we had a young couple come through. They loved it. The guy was into cars. He's a mechanic. So it had a pole barn too. Like, I mean, it was like a mechanic's dream, right? Mm-hmm. And they loved it. And once the loan officer mortgage guy went in and did the thing with the taxes, he's like, "This is what your payment's going to be." They're like, "Well, we could afford the principal and interest. Right. We can't afford the taxes."
Right.
You know?
Yeah. So what's affecting affordability more than anything is not the rate. It's the property taxes.
Yeah. Yeah. And we're seeing that I mean, I'm seeing it in a bunch of cities, right? Now, are you seeing that kind of across the country?
Mm-hmm. I do. We're licensed. I can do loans in any state besides New York, but I'm 98% in Michigan.
Okay.
So I don't, but I manage loan officers in Illinois, Indiana, North Carolina, and it's the same everywhere.
Yeah. It's been a problem. It's been a real problem.
Mm-hmm.
I had a client, we looked in Harper Woods. Harper Woods' mill rate's like 98.
That's unaffordable. There's a simple website you can go to, Google Michigan property tax estimator, and you put in, the city, the school system, and SEV, and it'll pop out the homestead, non-homesteaded rates. And I'm shocked to see those when I see them.
What was that website again?
Michigan property. Just Google Michigan property tax estimator.
Okay.
And then it'll take you right to it.
Okay.
It's a simple plug. You plug 3 things in and you got your estimates.
Yeah.
I'll send you a link.
Yeah. Send me the link because that and I'll throw it in the show notes. But because it's when you're out shopping with clients and they fall in love with this house, you're like, oh, this is the one. That's right up something. And then I go back and I pull the taxes and I'm like, and then you look, oh, they've been in this house for 30 years.
I'm like, what you don't want to see.
These are at least doubling, and depending if you're in Fraser, like Fraser's another one because they had that sinkhole problem.
Yeah.
A few years back. It's been like 10 years now, but they're still bearing themselves out from that. So their property taxes are doing the same thing. Whenever you sell, they're almost tripling when they sell. That's insane.
Yeah. And then you've got a client that their debt to income ratio is like 45%. And you're thinking this can't be good.
Yeah.
It's not going to be good for you guys at all. You're going to be house poor.
Yeah. No, and I like the fact that you brought that up because that's one of the things that everybody wants to blame somebody for something, right? And everybody wants to say, well, it's the rate, right? Or it's the 3% the realtors are charging, which I'm like, whatever. We'll go back to the whole Lara thing, the NAR lawsuit.
Let's not say we did.
Yeah. And or it's the rate, right? But it really boils back down to it's a lot of time it's the taxes.
Mm-hmm.
Because, and again, once you start plugging those numbers in, that's the first thing I do now. Like I've always done that, but it's even more important now that if I call the loan officer and be like, here's what we're looking at. Like you tell me if we can fit this in or not.
Right. And when I do that buyer consult, it's always enlightening to do this because they say, can I buy down my rate? I'm like, you could. But let's just look at this, and I show them what principal interest, the components of the payment, and then I'll on the screen right in front of them, I'll change the rate from 6.25 to 5.75, and like, wow, I thought it'd change the payment more than that. I'm like, well, it doesn't because here's your principal and interest. That's only part of the payment. You got more, mortgage insurance, possibly taxes, and homeowners insurance. So a lot of these things are fixed, they're not dependent upon the rate. So it's a good exercise to go through with clients.
Yeah. No, I love that. If you're a realtor out there listening right now or listening later, this is an important piece of this whole thing because again, dropping the rate doesn't change your payment that much.
No, it
As
doesn't.
much as you think it would.
No, I mean, everyone wants to get a good rate.
Sure.
But that's not the end all be all. It's an affordability conversation. And, if people want to pay down the rate, wonderful. We'll go through the calculation to see what the ROI is on that and what kind of timeline they would, take due to their savings of the lower rate to pay off the cost that they just incurred to pay down the rate. That's a good conversation to have because usually it could be 2, 3, 4 years. And
right.
I'm not going to be in the house that long.
Yeah.
So
that's another thing, right? How long are you going to be in this house? Because is it even worth paying down the rate if you're going to be here 3, 4 years?
Right.
Probably not.
Right. And, but some people, like our first house when we moved back to Michigan, we still own. We turned it into a rental.
Okay.
And now it's a year away from being paid off, which is a wonderful thing. But that case, I wanted to get the lowest rate on that. It was worth it to pay it down because I was going to hold that thing forever.
Yeah.
So,
yes.
Or if it also depends on the environment. If you are in an environment where you think the rates are going to organically drop, then don't pay now. Just see if you can get a free bite at the apple in a year or two.
Right. Right. Yeah. I mean, there's so much to it. And I think that's where, we were talking before we jumped on and I said I had a deal that in January where I was working I was on the south side and the loan officer from the buy side, we were talking and I said, well, we can't close on Monday. I said, can you get everything ready so we can close first thing Tuesday? And she's like, well, why can't we close on Monday? I'm like, it's a holiday. It was Martin Luther King Jr. Day. She's like, when did that become a holiday? I said, how old are you? I know I can be sued for that, but I'm like, how old? Like, I go, it's been a holiday longer than you were born.
Just
like,
couldn't hold back.
Yeah, I couldn't. I was like, then sometimes that like dad face just comes out to you. Like I can't. It's just there.
Right.
Luckily we're on the phone. And I was like, what? What did you just say to me?
That's awesome.
Yeah. So, but again, it goes back to kind of what we were talking to. It's like becoming a realtor, becoming a loan officer. It's not that hard. You know what I mean? It's hard to stay in the business.
It's not that hard, and it's amazingly simple to stand out and be in the top 5%, top 10%, just by doing some simple things like not being transactional, having real relationships, doing the right thing all the time, or at least trying to do the right thing all the time. Just picking up the phone and, when people call, it's amazing just doing some very simple things, how you can rise to the top in an industry that's, honestly, you and I know it's historically been littered with idiots, but now we've watched it, and in the mortgage business, I think there's been like a 75% attrition rate. It's amazing that how little of us are left. So I think we're seeing the true professionals surviving for the most part. Some people are just going to retire organically, but there's certain people at certain companies we won't name that don't know how to spell purchase transaction. They just know how to
refi.
Right. They're an order taker.
Yeah.
Those people can't survive.
They have 4 letters. It's refi.
Right. So you're seeing a lot of those fall by the wayside, which, there's thinning of the herd, which I think is a good thing for our industry.
Yeah, for sure. And I think that's it's held true in real estate too. Like the statistics that NAR put out the last 2 years, 2024 and 2025. In 2024, 70% of realtors sold 0 homes.
That's right.
In 2025, 72% of realtors sold 0 homes. It went up.
It's almost a mirror of the mortgage industry. Like, the top 5% of the loan officers in the country do like 80% of the mortgages in the country.
Yeah.
And the rest are doing, it's got to be a second job. I don't know how they're making a living.
It's the same thing for us, right? And again, I don't know how and the mortgage side, it's probably a little bit different, but I feel like a lot of people went and got a real estate license during COVID.
Sure.
Right. And they're not doing anything with it. They're just they have the license, which again, to me is expensive just to have as a hobby.
In case a family member buys a house or something.
Yeah. In case, and then there's a lot of investors, or air quote investors, that, want to do a flip or whatever. And so they keep that license because sometimes it's that number's skewed a little bit. But even if you look at the realtors that did actually have transactions, it's like 5 a year. You know what I mean? Like if you're doing 10 plus a year, you're in the top like 1% of realtors. If you're
Right.
doing a one transaction a month, you're in the top 1% of realtors.
Right.
Just crazy,
It is.
you know. Because of but that's because how many people have a license.
Yeah. There are, and speaking of investors, I don't know what it is lately, but I'm getting a lot of investor clients who's popping out of the woodwork. And I think, a lot of them are using that DSCR loan, right?
Yep.
You familiar with that?
Yep.
Yeah. So it's a good, I've got a good investor pool right now.
Yeah. Tell everybody what that is, because that's the DSCR loan is a good product.
Yeah. I've got a story to tell about it. So, just yesterday, one of my top realtors said, I've got a client. She's with another lender, but she owns a primary house and an investment property. And her lender said, you're kind of tapped out. We don't think she wanted to buy a fourplex and another threeplex. And her current lender said, I think you're done. You don't qualify anymore. And I told Stephanie, I said, that's impossible. I mean, they must be just looking at tax returns, because these DSCR loans, it stands for debt service coverage ratio. So on these loans, and they're only for investors, they don't care about your income. We don't put it on the application. It simply, does the rent cover the payment? And that's it. You got to have a decent credit score, but we're looking at the rent. And if you're looking at a property, it doesn't actually necessarily need to be leased. If it's not, we're going to use the appraiser's market analysis for value of the rent in that area for that particular property, their opinion. And as long as that covers the payment, and payment meaning principal, interest, taxes, and insurance, then they get the loan. So you can have, now it just allows you to go 10, 20. You can scale this to the moon. You're not limited by your income, and you can do whatever you want on your tax returns to deduct and depreciate, and it won't matter. So now it allows an investor to build quite a portfolio, because they don't have to worry about what they're doing with their tax returns. They can still do all the things they want to, which investors should do to, maximize their investments.
Right.
And a lot of investors right now are taking cash out using the DSCR of properties to buy the next property. So it's a wonderful loan for investors.
Yeah. Now, does the DSCR work for like a flip too, or is it just for it to hold?
We have different loans for fix and flip.
Sure.
But that was fix and flip. If they just want to flip, period, there's no fixing. You can do it, but as a lender, we like them to make 6 payments, because no one knows this, but
Well, yeah.
we get our commission taken back if
Right.
the client doesn't make 6 payments. So I have a very delicate conversation with the flippers.
Yeah. Yeah. But for realtors who don't understand that part, right? Like it's huge, because you have to pay that back then.
Yeah, it's called a recapture. So
Yeah.
I'll be sitting at my desk one day, and they're like, hey, Jimmy just sold his house 2 months after he bought it. We're going to take your commission out of your next check. And I'm like, okay, great.
Yeah.
And then I call Jimmy. I'm like, you suck.
Yeah. 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 That was always the word. So back in the day too, like many, many moons ago, I worked at Foot Locker, and Christmas time was always great, right? Because we worked overtime, and you were just selling, and people like literally the day before Christmas were just buying whatever. It didn't matter. So you got you looked at your commission and was like, man, this is great. And then people started returning everything. Well, those returns started coming off your thing. I'm like, stop returning everything.
I love how you related it to a Foot Locker job you had
Yeah.
so long ago. But
Yeah.
it's the same thing.
Same thing, man. Like it's like stop bringing those shoes back.
Yeah,
Like
let's just sell at Christmas, then close the store.
yeah. Yeah, but no, but a lot of realtors don't understand that part. So because working on the mortgage side, I don't understand that part, right? Like it's got to be 6 payments, or that comes back off, and it's a recapture.
Yeah, and I'm very transparent when I talk. I don't know why certain mortgage people don't want to talk about it. I mean, it is what it is.
It's money.
So
Yeah.
if you call me as a realtor and say I got a client, they're going to flip this house, I'll be like, I'll do it, but I'm going to try to ask them to make 6 payments. If not, I value your relationship. I'll do it anyway, but you just have the conversation.
Yeah. Yeah, because it's because for the flip side, it's like 90 days, man. I want to be out of that thing.
Right.
I don't even want to make 3 payments. Right. Really.
Right. So those situations, it is what it is.
Yeah.
And if I've got a client who's only going to do that, I'll probably say, this isn't really good for me. I'd love to serve you, but if all you're going to do is flip every property, and I'm working, I'm never going to get paid.
Right. use a hard money lender.
Yeah,
Yeah.
exactly.
Like
There are loans for that.
Yeah, there are loans for that, right? So there are companies that specifically do that, right? That's the thing is, I think that comes back to the realtors. We wear a lot of hats, and we should. These are clients' biggest transactions. It's their largest investment, probably, right? On top of just right where they're living currently, and then are they investing now, and they're trying to become investors to make more money. So they're making these decisions, and we're the fiduciary.
Right.
And when we stop thinking about what's our commission, like we start thinking about actually a business plan, all of a sudden the whole scheme changes.
And that's when it becomes fun, right?
Yeah.
It's like you put yourself in their shoes and you get excited because they're building their empire and you can help them.
Right.
You give them really good advice. And if you're working in tandem with a good mortgage person together as a team, you can put something nice together.
100%.
Yeah. Speaking of a team, I'm always looking for ways to help clients deeper and decommoditize myself, right? Because it's hard. People sometimes see a mortgage person as just a rate. You're nothing more. You're a commodity. So that's why I do that buyer consult. You get FaceTime.
Sure.
But I also talk with my clients about their money team. I'll ask them, who's your financial planner? Are you happy with them? Who's your CPA? Are you happy with them? Who's your estate planning attorney? Are you happy with them? And then I've got a network of those individuals that, and PNC, these guys here, right?
Yeah.
And I have that conversation and I plug holes because a lot of people are like, yeah, I got a financial planner, but he's a bum. I'm like, okay, well, I got a good one. And I plug the holes. So I have those conversations all week. And on Fridays, I make those deposits in as referrals to the money team. And, they give back. But it's another way to decommoditize myself. I'm not just looking at you as a mortgage. I'm looking at holistically your financial well-being.
Right. That's a professional, right? Like that's just you're a pro, and that's what we should do. Right, because again, we are the fiduciary,
right?
So we should be looking at the whole scale of everything. And what does this look like? Is it putting you in a good position? Is it putting you in a not so good position? Is it a position you shouldn't ever be in? You know what I mean? And I've literally walked clients out of houses and said, "You're not buying this house." You know what I mean?
That's a professional. Right
yeah,
there.
it's like this is no.
Right.
You know what I mean? Like I had a younger guy come to me and he was like, he wanted to be an investor and he had this idea, which is a great idea. He was at the time, I think he was like 21, 22. And so he was like, I'm going to buy this house and I'm going to live in it for, however long. And then I'm going to buy another one and rent this one out. I'm like, perfect. It's a great idea. So he started on this low end, really, really low end. And I'm like, well, so we went in and I'm like, well, how handy are you? Like, are you
such a good question?
Yeah. Like, how handy are you? Like, can you do this? Like, and I knew him. He was friends with my nephew. And I said, can you actually do the things that you need to do here? He's like, well, my uncle's pretty good at this stuff. And I'm like, all right, we can't do this house because this doesn't make any sense for you. A little work, paint, some carpet, like I get, you can do all that, and you don't have to do it. You don't have to hurry to do it. So we looked at it, and I did show him that low end, and he was like, oh, "That's a lot of work." Yeah, I know.
And you got to consider the tenants.
Yeah, and like again, location.
Right.
Where are you at with it? Do you want to have tenants in that location?
Right.
Because we know where tenants are, and that's what you're gonna get.
Yeah, and certain locations you're gonna have tenants moving in and out a lot. Like I've got one of the properties that I own is in Beverly Hills, and it was more expensive. It was a house that we used to live in, so I didn't really have a choice. We just moved out, but man, the tenants we've had there have been the easiest tenants on the planet. I've been blessed, knocking on wood.
Yeah, knocking all the things there.
Right, but so location. All the things you're talking about matter, and being a true pro as a guide, as a realtor like you are with these people is very valuable.
Yeah. And that's the tip for your realtors and for your mortgage people is get out, like, again, so there's a condition and there's an objection, right? A condition I can't change. It is, there's a railroad that goes through the backyard. I can't change that. So if I get to find out that client doesn't really want the railroad in the backyard, we're not even going in the house.
Yeah, we're not going to reroute the railroad.
No, that's never happening. And so, I didn't want to show them the house because if by chance there's something in that house that they really like, every house we look at beyond that, they're going to compare to that, and they're never going to buy that house.
That's right.
So they're always going to compare it to that, but they're always going to. But it's like, so I don't even go in. I'm like, if you don't like this neighborhood, the street, front yard. Like if you don't like any of this, where do you want to go? There's no sense of going in.
Putting your psychology degree to work right there.
Right, exactly.
You know how the brain is wired, what neurons are going to fire, what dopamine's going to hit.
Yeah.
I need these granite countertops. I saw it, but I didn't like the railroad. And then there's the bar for every other house.
Every other house. Yeah. Yeah. So there's a lot of psychology that goes behind this. And you know this. Again, it goes back to your rate conversation.
Yes. Yeah.
You know, like you said before we came on, like people call you, what's the rate?
What's your rate?
Yeah.
And you're like, well, let me pick it out of the drawer. Hold on 1 second. Like, can I know your name first? Maybe a credit score? But yeah, I mean, the rates can be anywhere from high fives to low. I've got a guy just put in a 9% rate because it was a no income loan, primary residence. And I'm like, well, you don't show any money on your tax returns. You don't have a pay stub. You don't even have a job. What are we doing? He's like, I'm a professional gambler. I said, okay, well, great. If you've got 25% down, we could put you in a no ratio loan. It's like they don't. All they're looking at is your good credit and a big down payment, 25%. So you get the home, but there's a big risk with that. So you're going to have a rate of 9%. It goes commensurate with the. So just to wrap that up, it's like your rate. If you're a normal buyer, you got good credit and everything, you could get this rate. And the spectrum goes way up the line, and there's everything in between depending on what kind of program and what you look like as a buyer. So there's no just one rate.
Right. A professional gambler.
Yeah, it was good. Again, you've been in this business 26 years, you see everything. And then some.
Well, and if you think back to 26 years ago when you started doing loans, it was kind of like, do you have a pulse?
Right. Now, there's people are like, when I say there's that loan that I just talked about, they're like, isn't that going back to the subprime days? I'm like, no. The subprime days, you put zero down. And you breathe on a mirror and you have 3 houses.
Right.
It was crazy.
Yeah.
So now there's, the pendulum swung. There's all these portfolio, they call them non-QM loans, which we do all of them and then some, but they're smart about the risk, right? They're doing it right. It's not the Wild West like it used to be.
Yeah. Well, and it's funny because we have this tendency in our society to like just broad brush the whole thing, and then you've got that old curmudgeon guy that's like, see, it's right back to where it was before. You guys are screwing everything up and it's going to all crash. And I can't wait for the bubble. And I'm like, there is no bubble, first off, right? They're like, I get it. Credit card debt is high in America.
Yeah.
It is.
That's our country.
Yeah. I mean, but then at the same point, people have not had this much equity in their home ever.
Fact.
So it's like, well, so there is a balance there. People just don't know how to use it.
Right. Yeah. I mean, refinancing for a better rate's great, but I love when I can refinance someone and pay off a ton of bad debt.
Yeah.
And use that equity and pay off high interest debt, bad debt with lower interest, good debt.
Yeah. Yeah.
Home improvement, great. Paying off bad debt, great. Lower the rate, great. But my favorite transactions when I can, you lower someone's rate and their payment might change, a couple $100 a month. Great. Excuse me. Someone who's got $50,000 of bad credit debt, you pay that off, and then their monthly cash flow gets better by $800. Now that's exciting.
Yeah.
Right. I mean, you just changed this person's life.
Right. Right. That's the thing. And it's amazing how that can happen. But again, it goes back to being the pro fiduciary, making sure you're putting people in the win-win situation, no matter what it costs me.
Right.
Right. That's just kind of what we're hired for.
And be able to tell people, I mean, you and I both, I'm sure, in our careers been in a position where you forego a commission because you told someone this is not a good idea.
Yeah.
And there's a lot of people who would just say, sure, you want to do this, even though they know it's a bad idea, just to get the small check.
Yeah.
And it's like that those people are not going to survive.
Yeah. No, and I do find the more you do for others, the better longer you have. You know what I mean?
I believe in, whatever you want to call
Karma's
it.
a thing.
Karma,
Yeah.
good vibes you're throwing out. You do
Yeah.
the right thing as much as possible all the time. It's going to come back to you.
Yeah. Yeah. 100%. Brian Edwards said, morning, fellas.
Morning, Brian.
We're in the Royal Oath office right now, actually. So, but no, man, it's true. And Brian's one of those guys too, insurance wise, right?
Yeah, and that's why I work with these guys.
Yeah.
Jim and Brian and Owen, great guys, and they're like us. They're true pros. They're not going to just throw you a premium at the lowest premium possible to get your business, they're going to make sure that they have a conversation with you and that you're covered properly.
Right. Right. Yeah. You know, I coach Jim's son.
Oh, I didn't know that.
Joe. Yeah. Yeah. So I've been coaching for a long time, but and it's funny. So now I'm an assistant at De La Salle, and the JV coach I coached in high school. So
Oh,
we've
man.
done this whole full circle.
You're an old dude.
I am now. I've become the old guy. I'm like a consultant now.
I coach both my boys in travel baseball. So that's another exercise in psychology, dealing with the parents.
Oh, man. So I did the travel baseball thing with my oldest son. My younger son played for a while, but then he likes golf and basketball. Like so we stick to that.
Yeah.
But no, the parent thing is, I had an old mentor of mine. So when I was a young coach, now I've become the old coach that's mentoring, right? But when I had a mentor that he told me one time, he said, "You know where the best place to coach is?" I said, "Where?" He said, "An orphanage."
That's right. There's a movie you have to watch this. Remember this. Throw this in the show notes, whatever. It's called All Stars.
Okay.
So if you've ever had a kid who played travel sports, whether it be basketball or baseball, watch the movie All Stars. There's a quote from the coach. He just got on the team. He starts coach. It was girls softball. That's based off of a girls softball team. And after the first practice, he's walking to his car, and three of the parents approach him, and they're like, "You know, we really don't want to get too involved, but this is what we would change." And then he that pans to the camera later. He's like, "You know, I'd love to coach a team where the parents are all dead." It's a great movie, by the way. All Stars. You have to watch it if you've got a kid in sports.
Yeah, I'll have to check it out. But yeah, it's crazy. But then those are the people, we talked about this before. Like, those are the people we work with people.
Yeah.
Right. So we
have the spectrum.
Yeah, we're still dealing with it. Right. Those same parents that are crazy about their kids in sports are buying houses and need a mortgage. Right.
Exactly. Exactly.
Yeah. They seem sane on the front end.
They do. And then you get a glimpse behind the curtain.
Yeah. And then you're like, no, this is just negotiation.
Yeah.
You know, I've literally had clients at the same time, like, we were negotiating over, $1,000. And I'm like, we're really walking away from a $350,000 home based on $1,000 over the next 30 years?
It's crazy, isn't it? It's like penny wise and pound foolish.
And it's because it becomes the principle, right?
Yeah,
It's the principle of the thing.
I don't want to lose the argument.
Yeah. I'm like, well, I've given them everything. I'm like, you really haven't given them everything. Like,
take emotion out of it.
Yes. But that's the problem, right? People buy on emotion and justify with logic.
That's well said. Yes.
That's what they do. Like, I always relate it back to a TV, right? I don't need the 85-inch TV in my living room, right? I don't need it. I want it. So emotionally, I go, well, we need this TV, so I can see it better, right? Like, and logically, well, it's only this much,
right?
Right.
Right. Right. Yeah. I'm looking at my TV in my family room right now. It's huge, but it's like there's a little bit of wall space left.
Right.
I could probably expand that.
Yeah. There's a little more. It got like about 4 inches on each side. I could go a little wider.
My wife leaves the room promptly and gives me that look.
Yeah.
Yeah, but I'm right.
At least we think we are.
I feel right.
Yeah. Yeah. But it's same thing. It's true with houses.
Yeah.
I don't need the 7-bedroom. If you see what Matt Ishby is building,
I would love to see it. I'm sure it's
a water park in the backyard. He's got a lazy river. Like,
oh my gosh, good for you, Matt.
Yeah, what, he doesn't need it,
but he's got it.
Yeah, buy an emotion, justify with logic.
Well, there you go.
Yeah, because he said he wants it for entertaining.
Yeah, right.
How many people are like, who's all coming over?
I'll come over, Matt.
I'll
fly down your lazy river.
Yeah, just have people over all the time. I'm like, he probably wouldn't even know if you're there.
It's like Field of Dreams. Build it and they will come.
Yeah, exactly. But no, it's true. And it's true in our business, right? Like, where do you see, so to shift a little bit, where do you see this between now and the end of 2026? Like, where are we at? Rates going to drop? Rates going to hold steady?
God, I wish I knew. I don't think they're going to move much. I really don't. With the Fed drops rates or, raise, whatever the Fed does, it doesn't. Let's just touch on that for 1 second.
Yeah.
As soon as the Fed drops the rate a quarter point, I always get 20 phone calls and say, hey, well, does my rate drop a 0.25%? It doesn't work like that. They're not directly correlated.
And in fact, so everybody knows, is when the Fed rate went down earlier or late last year, the interest rates actually went up.
Right. That was a literal fact. And
Yeah.
people, they're just, mortgage rates are a market phenomena. There, there's job reports, there's inflation, all these things go into it. And the Fed, if they say they're going to drop rates a quarter and they do exactly that, and there's no Fed speak around it, usually it's calm waters. But there's a lot of things that can, the Fed chairman says something, we're dropping it now, but I don't know about next time. And then all of a sudden that's going to affect the rate. So again, to be a rate aficionado and just focus on the rates and watch it doesn't make sense. Let's go back to concentrating on affordability.
Yeah. So,
but yeah, back to your question. This year, I don't think rates are going to move that much. If they do, I hope they drop more into the 5s. That'll make affordability a little bit better. It'll allow some other people to refinance. But what I'm hoping for is robust inventory. I think it's going to be a banger year. I really do. I'm excited about it. We're already starting to see it. But if inventory continues to lag a little bit, you tell me, I want to hear what you think about inventory, because I don't see that. I don't track inventory as much as a realtor was.
Right.
But, yeah.
So inventory is going to be, I think, dependent on the rate. Right.
Okay.
Because I think if you're at the 2s or 3s,
people will move out of their house.
If they get to the 5s, I think people will move from a 3 to a 5. People weren't moving from a 3 to a 7.
Right.
They were like, that's 4 points. Like, I'm not. Why would I do that?
Unless you have an extreme need, like you have to downsize,
move, right?
Or whatever.
Yeah. The interesting piece is, I just read this article, and I'll have to share the article with you. Sean Stalker, who was on with me last week, shared this with me. So it was people over 70. Mm-hmm. Now, people over 70 are interesting. Their houses typically sell for 5% less than everybody else's.
Because they own it free and clear, and they don't need top dollar.
And it starts to become run down.
Okay.
Because they're not doing the general maintenance anymore, because they're over 70, and I don't go out and do the landscaping anymore. And I don't do, like, if there's,
I love my shag carpeting.
Yeah, I love my shag carpet. And there's, there's shit growing in my gutter, but I can't get up there. You know what I mean? Like, there's all these things are happening.
There's a small tree in my gutter.
Yeah. So, but I can't get up there to clean it out, right? Or I don't want to spend the money to have somebody come do it, because I don't trust anybody. All these things are happening. So I think they've been holding on. In this article too, it said they've been holding on to their houses a lot longer instead of no, they're not downsizing, because they're concerned about downsizing is the rate. One, they don't want to spend the money. And then the other piece that falls into that is back to the property taxes.
Yeah. Yeah. I've been working with a lot of clients who are doing exactly that. And another problem that you run into, so this will be a shameless plug, right? But
that's what you're here for.
They're not fixed income now. So they still have maybe a small house payment, and they want to move downsize or sideways, whatever, into a condo, something with less maintenance. And so they've got to make a contingent offer, and it's rough on them because, all their money's tied up in their house and they don't qualify with both payments. So we've created a product we've got a portfolio bridge loan, which, so we can get the money out of their house. That solves one of the, problems. But we also have the ability to write a binding backup offer on their current house, which, if it's a conventional loan, Fannie and Freddie say, if you've got an offer on the house with no contingencies, we don't have to count the debt on the departing house.
Interesting.
So it's a double. There's only really 2 reasons an offer is ever contingent. It's they don't qualify with all both payments, or they don't have enough for down payment because it's tied up. So we can solve both of those problems. So I'm taking a lot of the boomers, or they don't even have to be boomers. They can be people my age, but you don't have the money for down payment, we'll get it out of your current house. You don't qualify with both, we'll write the binding backup offer. So I've kind of considered myself a contingency removal specialist. There should be no reason to offer with a contingency. Yeah. And to buy first and sell after is so much less stressful.
Yes, it is. And it's for us as realtors, it's the timing piece, right? Like,
yes. Instead of doing that simultaneous dance. This makes a lot of, when I talk with new realtors, I lead with this because they're like, wow, I can unlock some deals.
Yeah.
And make people happy.
100%. Because that's a hold up too. Right. That's another log jam in the system is, well, I'd love to sell, but what do I buy? I don't want to be
Right,
homeless, right?
right.
Like that's always the
If
thing.
the inventory is not there and I sell, then I got the cost of a double move. It's very stressful, or I might be forced to settle because I need to buy.
Right.
But if you can just relax and buy first and then sell, and it's easier for a realtor to sell a house when the buyer's out, right? When the
Yeah.
client's out.
Yeah, and the other piece of that is like you don't want to move in until you paint and
Right.
clean the house and change toilet seats and do all the things that you need to do before you move in. You know what I mean? They
Get that
don't.
shag carpeting out of there.
Yeah.
Pea green refrigerator.
Yeah, I mean, you want to get that stuff out of there before you do that, and that's that's the hard part is like, well, I'm moving in this day because you moved out yesterday,
Right.
and because the person is moving into my house tomorrow,
Right.
Yeah. But that's a huge thing because I think that's another creating a log jam in our system right now too.
I'm gonna unjam it.
I love it. Everybody, send Dave your
No
clients.
contingencies. No contingencies.
The contingency specialist. That could be your whole.
I am the mortgage brain. I branded myself, but maybe I'll do a sub brand.
Yeah.
Contingency.
The mortgage brain.
Yeah.
Okay.
Yeah.
All right. So I think, but I think that so this year, I think it's going to be a banger year too.
Yeah.
I think it's going to be a big year. I think between the last 2 years, I think a lot of agents and a lot of loan officers got out of the business.
Truth.
Which I think will help clear us up a little bit too.
Yeah. And I'm excited. I'm really
Yeah.
I'm 55. I've been doing this 26 years, and because of the company I'm with, and I don't know, I'm just having more fun than I have in a long time. So I'm to have fun doing what you're doing and helping people. It's a good thing.
Yeah.
I get up and I'm happy.
Yeah. That's key, man. That is key because if you wake up and you're not happy, that makes for a long day.
Especially as you get older, it's harder to just generate energy out of thin air, like when you're 25. Right?
Yeah.
So
Yeah.
I need organic.
I'll be
feel
53 in a couple weeks.
Yeah.
So yeah.
I'm telling you, 2 years from now, you're going to want to be happy still. And, but it's a lot easier to generate that energy when you love what you do.
Yeah. 100. I say that a lot, and everybody has said it, and it's an old adage, right? But if you love what you do, you never work a day in your life.
Yeah.
And I found giving back to people, right, and giving back to agents, and giving back to loan officers, and giving back to my clients, and whoever else. The more I give back, the better I feel.
Yeah.
And the more I think I receive.
Yeah. There's a lot. I read a lot of self-help, books and self-improvement books, right? And there's a common theme in a lot of these books that some of the the very wealthy people say, if you focus on getting other people what they need, your wealth and your success is a byproduct of that, right? It doesn't go with human nature a lot, but if you ever figure that out, it will manifest.
Yeah.
Because everyone's usually, I got to look out for myself first, and everyone else be damned. But if you're truly helping to help a lot of people get to where they want to be, whether with business partners, clients, whatever, your success is just a byproduct of that process.
Yeah. Yeah. What's your favorite book?
I've got a book called Undeniable by Cameron Haynes. It's an incredible book. And then the 5 a.m. What is it called? 5 a.m. Club.
Okay.
By Robin Sharma.
Are you a 5 a.m. guy?
I am. I've just changed that routine about a year ago. It takes a minute.
Yeah. I've tried it a couple times.
It doesn't take quickly. So you got to change. Like, I'm a night owl, so first of all, I had to change that, because if I don't change that, the 5 a.m. is not there.
Exactly.
So it's actually helped me develop some better habits. Because I'm sitting there watching my sports or whatever, or Netflix until midnight, I'm probably having a cocktail and I'm eating a bag of Doritos, which is not good for me.
Right.
So, but if I get to bed at 10, then things change, and I get up at 5 and set up my work day, get my workout in, and bang out all my emails. I'll get more done between 5 and 8 than I do the rest of the day. So
yeah, and it's probably quiet. It's quiet.
Right. No one else is banging on you. We're in sales. As soon as 9 a.m. hits, you got everyone in the world trying to reach out to you. And then it's hard to be proactive and intentional about your day. That's why I get up at 5 a.m., set it up, and it's like, okay, this is what I'm going to try to be intentional with, at least today. And at least you're making the effort.
Well, and the other part of that too, like there's days that I get home and I tell my wife, like, I'm just done peopling today.
Yes. Amen.
I've done it all day.
I've even had my mom call me at like 7. I'm like, I can't talk. I got to put away my phone. I'm kidding. I will talk to my mother. But
Yes.
it's like, I feel like I'm phoned out.
Yeah.
I want to just crush this thing with a sledgehammer.
Yeah. And I don't know if you've had, but like I get to do a lot of presentations, right? Like, so I'm up in front of and what people don't understand how much that sucks out of you too. Like when you're up in front of people, I enjoy it. I love it. It's one of my favorite things to do is public speaking. People are like, you're weird. You know what I mean? Like, but like, I still get butterflies, but I like it. You know what I mean? Like, it's like that.
I love that.
But it's draining.
It is. And there are people who I don't know you well enough to know, but I've been like, you drop me into a situation like that, I do really well. But I think I'm an organic introvert. So that someone called me an extroverted introvert.
Yep.
And like, I'm very happy with my wife on a Saturday night watching and reading a book. But I do love social situations. You just drop me on a parachute with a cocktail into a party and I'm the life of the party. But
yeah.
I'm more, but that's draining to me.
Yeah.
So I think maybe for a natural extrovert, it wouldn't be draining, but there's not too many people like that.
Right. Well, so, and part of that is too, like I call it, put on your super suit.
Yeah.
Right. Like you have to, and I'm like, Sky, and I'm like, then when I get home, I'm like,
right.
plug me in. I'm done with this today. Yeah. But no, there's a lot to that, man. And we do a lot during the day. Like there's a lot that happens during our days that it's all of a sudden, it's like, I just want to like shut off. Like technology, AI. I've been on this AI deep dive for like 2 years now.
Oh.
Where I've combined emotional intelligence with artificial intelligence. And like, because there's this fork in the road that we're at right now. Because if you've traveled recently and you go to the airport, now they have those like workerless stores. You seen those yet?
No.
It's wild, man. Like you go into it's like a regular store in the airport. There's nobody working.
Oh,
there.
I have.
Yeah. You just go in.
They're like cameras.
Yeah. You grab your stuff and then you just hit your card on the way out and you're done.
Yeah. I have been in those once.
But I don't want to live in that world.
I'm the old guy who like, my wife's 7 years younger than me. So like, I'll get someone will write a physical check and I want to walk it into the bank and talk to the teller.
Yeah.
And it served me because like I've created a relationship at Chase Bank with the mortgage person. She sends me deals that they can't do. I'm like, see, it works.
Yeah.
She just wants to take a picture of it and send it. I'm like, no, I'm walking it in.
Well, and then it's like, it's like those, what is it, the Geico commercials, like becoming your parents, right?
Yeah,
like,
those are my favorite.
Yeah, but we're all doing that, right? We're trying to hold on to that little piece of like that memory we have of like having conversations with people and just talking to people like you're a normal person,
right?
And not just like transactional, like boop, boop, boop. Like I that's why where COVID was so hard for me. Like I'm a hugger and a handshaker and all the things and. It was like the fist bump, elbow bump. Like where are we at right now?
I know. That was a very transitional period for so many people and society. It's just changed a lot of things.
Yeah, but I see some of that's back. It's coming back, right? I think it's. I know it sounds crazy, but we're 6 years into 2 weeks to flatten the curve. But this fork in the road, I want to bring that back together with some emotional intelligence because I feel like that's one of the biggest things we miss. And I'm even harping on it with like at the high school level.
I was just going to go there with the kids.
Yeah.
The kids who are going to be successful and going forward are like, they're going to be just simple communication skills. Like, they're going to be unicorns.
Yeah. Well, we talked about this before we jumped on air about kids, right? And your son's having a ton of success. But he's talking to people.
Yeah.
You know what I mean? Like, think about that. And this is what's really weird. So he's 19.
Mm-hmm.
My oldest is 21. He'll be 22 this year.
Yeah.
So his sophomore, junior year of high school were COVID. So that's your biggest 2 years of like, it's the first, you start driving. And then because his license was delayed because we couldn't go to Secretary of State because it was closed.
He was robbed of a couple of years.
Yeah. And so, but now I see he's recovered from some of that, but it took a while to recover from that. Where at 19, she was almost too young. They got sent home for a while.
Right.
But they were on Zoom. They bounced back.
I don't think they were ever on. Yeah, but I could see that.
Yeah.
He had older friends that I watched that happen to, and they got even in the first year of college. It was like that's not the college experience that I.
No, it was. Yeah, they look around each other like, "What do I do?"
Yeah, take it like taking a college course online when you're at a big university, I'd be like, no, thanks. I want to be with people.
Right. I want to be around people. I always want to be around people. Like, I don't want to not be around people.
Right.
And so that's where we're at with that. But I appreciate you coming on. Where can everybody find you?
With Cornerstone First Mortgage. I've got just Googled. Oh, geez. That's a good question. We'll drop it in the show notes because I've got a landing page. I don't know how to, direct people there right now, but my phone number is 734-891-4348. And Dave Keblaitis, Cornerstone First Mortgage. That's
social media handles.
Oh yeah. So the Mortgage Brain on Instagram. That's probably the easiest way to find me. I've got a pretty good Instagram following. So
the Mortgage
Brain. Or if you put Dave Keblaitis, it'll probably find me too.
Yeah. Well, I appreciate you coming out, my friend. I told you that hour goes faster than you think it does.
Thanks for having me, Jimmy.
Yeah, man, for sure. Anytime. And guys, we'll be back. If you find us on YouTube later on, like and subscribe to the channel. You can find us wherever you find podcasts. And we will see you all next week.